my screen?
Yep.
Yes.
Absolutely. Absolutely great. So, good afternoon from Dubai, and good morning from the other countries that we have. It seems that we have a myriad of countries coming in. We have people connecting from 10 different countries, it seems. From the US, from New Zealand, we have as well KSA, the Philippines, of course, around here in Lebanon, Jordan, and we have even a Canadian participant, an old ex-Nestle colleague of mine. So welcome everyone to the joint Trinity and Netstock webinar. Whose stock is it anyway? This is a great opportunity for us to explore the synergies between sales and supply chain, and I'm honored to be partnered with the Netstock, and I'm very happy to have the guys over here. Before we start, some housekeeping rules. So to avoid any interference, let's make sure that all of our mics are on mute. And I'm certain that you have all come in here already with 1,000 questions. So we're going to leave it to the end of the discussion. We have a dedicated Q&A session where you can interact with the speakers. And if you have any questions, you can use the raise button on your Zoom function. And if you see over here, I don't know if you can see my screen, you have it here. The Zoom button is on the, there's a raise button, which if I'm not mistaken, is on the.
It's under reactions.
The reactions, I'm trying to find it over here, but it's only when you're sharing, it's not showing the reactions over here. So
it's
okay,
at the bottom of the screen.
Yeah.
Yeah, but the problem is
bottom just slightly to the right of center.
It's slightly to the right, and so there's a circle, and it has a little plus. You can press on that, and then you will see the raise hand bar, in which I will see that on your screen, and I'll call you out, and then this way you can unmute and you can ask your question. So let's have fun and enjoy the discussions. Just to introduce today's panel. So basically, there is myself, Najib, and David. I'll start with a small introduction about myself. So for those who don't know me, my name is Mitchell Haddad. I'm the Chief Empowerment Officer of Trinity Empowerment Solutions. We are an international trade development company. We've recently started. And I'm happy to have on board Najib Maalouly and David Walton. I'll hand it on to you, Najib, for a short introduction about yourself.
Hi, good afternoon, everybody. My name is Najib Maalouly. I am the Group Commercial Director for NFPC. I'm very excited to engage with all of you today on a very, very interesting topic.
Najib, if you could just describe a bit about NFPC, very briefly.
Absolutely. I think, I don't know if a lot of people know about NFPC or not, National Foods Products Company, but we're one of the leading manufacturers and distributors for our own brands in the UAE and in the region. So we operate in categories such as water, juices, dairy, and bakery. And our company is a very well-established company in the UAE with more than 30 years operations.
Awesome. Dave?
Hi, everybody. So I'm Dave Walton. I've got about 39 years in inventory planning in one role or another. The last 6 years of which I've worked for Netstock. I'm the UK and Ireland General Manager in Netstock, but my region also includes the Middle East, which is why Mitchell has partnered with us. And if you go on to the next slide, Mitchell, we got a little bit about some metrics for Netstock. So Netstock is a cloud-based ERP agnostic inventory optimization solution, a global solution, been going since 2011. And we've got customers in more than 42 countries. Their customer count's just gone through 1,760 globally. And we're helping those businesses optimize in excess of 100 million items and more than $15 billion worth of inventory. So some big numbers there. And just in terms of the functionality, so there's a statistical forecasting engine. How we set ourselves apart is one of the things that we do is we assess the inventory risk, the supply risk, and the demand risk. And that is an input to our safety stock calculation. And then we recommend what needs to be ordered, so purchased, manufactured, transferred from one location to another. So that's a little bit about us.
Okay, absolutely great. Now, just to go to the agenda. So as you see, there's a welcome introduction, which I'm in charge of, and I hope I'm doing a good job with that. Then we're going to open up the discussions with Najib and with David, and then finally we'll have the Q&A session. So just to kick off the discussions, I mean, it's like the stock, just like the title says, whose stock is it anyway? You know, there's the epic discussions between sales and supply chain in organizations of saying, you know, how much stock must we have to how much stock do we need? You know, and we ask, and then the other question is, are we producing to satisfy the sales guys, you know, to have ample stock so they can have their sales opportunities, or are we producing stock to maintain low costs and efficiencies in the upstream supply chain? You know, and compounded on top of that, we have COVID-19 as a pandemic that unfortunately has made the discussions not any easier, and it has forced agility and adaptability into the equation. So today we'll delve deeper into the topic with a friendly showdown between sales and supply chain by our experts. And you know, and I always say that where one sees challenges, we see synergies, and it's all about perspective, objectives, common goal, and of course one view on data. So I'll just kick off the discussions right now with a question for you, Dave. What do you think, in your opinion, are the three things that any organization should do to have a robust planning process?
Yeah, it is three things in my mind, and this chat sort of deliberately simplifies each one of those. But the three things in my mind: one is to have the right planning parameters, the right planning policy, which is basically the mixture between the investment and the desired service that the business wants to provide. Another very key one is to make sure that the master data is accurate. You know, if you're trying to plan an item where the lead time actually is 100 days and you're planning based on a lead time of 50 days, then obviously the outputs are not going to make much sense. So those are two very key bits of that jigsaw. The third one, and I think in my mind is more important still, is to have a robust forecasting business process. And this is true whether you're planning in a sophisticated solution like NetStock, or even just in spreadsheets. You know, not having an input from the sales guys in terms of where they see things that might be different in their future, that was different in their past, is really not going to enhance that planning process to make sure that the inventory is available for whoever owns it. And you know, Najib's here with us, and I do know that they have quite a good and robust forecasting business process, and it would be great to hear what Najib and his team goes through on a monthly basis within that.
Absolutely, Dave. Actually, I think you touched upon very important points. No doubt, for every organization, at the end of the day, it's all about how you utilize your working capital. What, you know, I've been with the group now for 2 years, and part of my mandate was basically to develop the SNOP, which basically governs the business process that we have today. So basically, it's a consolidation between and collaboration between basically the sales and operation plan, basically the demand and the supply planning. So what we do and how our month looks like in terms of our SNOP is that we have different business units within our organization. For example, the modern trade business unit, the traditional trade business unit, exports, and so forth. So we have multiple verticals. Therefore, what the starting point of the process is that the business sets up their forecasts down to the granular level, so down to the SKU level, obviously in volumes. But we've developed, you know, the files further to give us more indications in terms of value and obviously profitability. Once you do any point of time, the change in your forecast, so it shows how it reflects over the 12-month horizon. So the input is basically the business unit forecasting that is consolidated through the sales analysts. that is then shared with me. So I review with the business units, the forecasting down to the SKU level for reviewing obviously the trend, the history, and other facts that we need to obviously reference check to, and as well as the upcoming plans. So you take into consideration your trade marketing initiatives, your marketing initiatives, whether it's any innovation in the pipeline, any renovations, any delisting, optimizations, etc. And then you build your forecast accordingly, take into consideration obviously running rates, promotions, etc., like what I presume most organizations do. Once that forecast is consolidated, it's then sent across to the supply team, who obviously run their analysis granularly as well, and then obviously comes back to us with their feedback in terms of if there's any anomalies or any variation versus the trend, or any concerns they have from a supply perspective. That is re-reviewed again between me and the business head for a final check. Then it goes to the supply chain for vetting, and then obviously communicating it down the line to the manufacturing team, and then obviously in collaboration with the finance team and the procurement. So that's in a nutshell how the process works. The only missing element is something that we have been working on with the Netstock on recently, is how to automate the process and put in some intelligence behind how the overall business process is governed.
So that sounds a great process. So presumably at the moment you're utilizing Excel in this analysis. Typically, how long does it take you each month to go through this process, Najib?
That's quite a very good question. Of course, time is of money and an essence these days. So I'm a big endorser of productivity. So I try my best to conclude the process in as short period as possible. It used to be a 2 weeks process. We've shrunk that down to almost 7 days. Yes, it is on Excel, as you rightly indicated. So it is a process of around 5 to 7 working days that involves all the parties.
Okay, so
Sorry,
Dave.
No, you go.
No, I was just going to ask you. I mean, since you mentioned about automation, so what in your view is the ideal business process in an organization? If you wanted to have an ideal business process for NFBC, for example, what would it be?
Yes, definitely. First of all, I want to refer back to the point of Dave. Your input is pivotal, right? Your master data is pivotal. You need to always refer back to clean data. You can't put forth any forecasting projections if your data is not credible. So I think we've done that exercise. We've actually gone back into our history and cleaned our data over the past 5 years for us to be able to establish a solid foundation that we can utilize once we upgrade into the, automating the whole process. So for me, in a favorable world, I would probably assume that with the tools similar to Netstock, you obviously load all the data, the historical data into it, and you let the intelligence run the simulation for you that you usually do over the week that we spend, and then come back to you with recommendations, basically on how it sees the forecast moving forward, taking into consideration seasonalities and other metrics or KPIs you put or laws you put within the overall ecosystem of the software.
Because then, of course, you've got a great starting point. You do need to overlay where things that are happening that's different in your future from the past, new product introductions, things like that. But at least it gives you a starting point, and you're not having to build everything from scratch. For every item, you've got a starting point that you can then challenge and just make amendments where maybe the totals at a total group of items level, we take all the forecasts, we multiply this by average selling price, and we're some way away from budget. So now we know there's some items maybe within there that we have to challenge, right?
Absolutely, Dave. There's one more point there that I did not really touch upon, was that obviously the classifications of the SKUs is something that we also use and adopt. in our process today. It's very important because at the end of the day, in many organizations, you have organizations that have 100 SKUs, you have organizations that operate with 2,000, 3,000, 4,000 SKUs. So obviously we follow the Pareto's law, so it's the 80-20 rule, whereby we focus on the, the least number of SKUs that contribute to the most of the business. And that's where you can go wrong. But as you indicated, of course, with tools such as NetStock, they, basically the system manages all the criteria for you. And basically what it does in a nutshell is that it does for you the thinking, and to a certain extent eliminates any specific, human errors, formula errors that we all go through sometimes and we have experienced in our career.
Yeah, sure. And if you ask Google, he'll tell you that 88% of all spreadsheets have an error in them, right?
Correct, absolutely. Except mine.
Something so important as that. Sorry, Najib, you finish.
Except my Excel sheet.
Of course, yours is one of the 12, right? An interesting thought. So the organization you work for is quite a large organization. So clearly it's very important to have a process like this. And I have a view to the answer here, but I just wanted to understand your view. So do you think this process is something that only large organizations should go through?
Definitely not, Dave. Any organization can benefit from intelligence, right? From AI. As long as you have the right data, as long as you have the right resources to manage, obviously the tool, because obviously it's all about the inputs as well. Basically, in a nutshell, any organization should and can use it. I see no limitations or restrictions on who can use it or not.
Yeah, I agree. And, something that we chatted about before, in some respects, it's even more important
for the small organization. Yes, absolutely. Because one error can have massive repercussions on the overall performance of the organization. So yeah, no doubt, it can be even more valid for small organizations as much as that is important for big ones.
And I demo to all sizes of businesses that are looking for solutions. And often that's to the more operational folks within that organization. And I often ask, how much input do you get from the sales part of your organization in terms of what they see that's happening into the future? And it's a remarkable number where they say, we don't get anything. And I say, well, that makes your job very easy, because if they can't talk to you about what they think they're going to be selling, they can't complain when you don't have the stock. Now, of course, that never is the situation, right? But it just shows you how important this forecasting business process is to organizations of all sizes, all industries. How do you know what you need to buy or manufacture today if you don't know what you're going to sell tomorrow?
Correct. You're right.
And of course, technology can help, but it doesn't matter. Even if you're planning in Excel, you are taking that risk because planning spreadsheets can get quite complex. But even if you're planning in Excel, you still need that robust forecasting business process. Where I often talk about if people are looking backwards and they're taking averages over X months, etc., etc. It's a bit like driving the car forwards just by looking in your rear view mirror. You've really got to understand whether there's trends, whether there's seasonality. Very difficult to do that in Excel, but a very important input to working out what you need to be buying and manufacturing or transferring from one warehouse to another.
Absolutely, Dave. Absolutely.
Even more so now, the pandemic is making everybody's lead times longer, which makes it the longer the lead time, the more important it is for you to understand what's happening from a trend and a seasonality perspective.
Correct. Absolutely. One more point, Dave, I'd like to add is as well, we operate in long life and the short life business, right? We operate in the fresh business. And it's extremely complex because when you do your fresh planning, you do it down to the day. You don't do it like you do when it's long life. You don't look at it at a week level or a monthly level. You look at it at a day, by day. Therefore, it is very rare to see organizations that does their planning or their forecasting on any horizon that's more than a year or maybe even 2 years in terms of benchmarking. So the ideal scenario is that you should always be looking at least 2 years when you forecast, even sometimes 3. I've worked for organizations in the past that they look into the forecasting from a historical perspective down to 3 and 4 years when they do their weekly planning. Example, Ferrero. So it is extremely important to have a business process that governs and controls and can give you that comparison to that level of extent.
Great. Very interesting discussion. Mitchell, did we have any other questions that we wanted to address?
You're
You're on
muted.
mute.
Murphy's here. Awesome. No, actually, I had one question for Najib about, actually, it's 2 questions. One about how is S&OP perceived in the Middle East? And the other thing would be like, how has the pandemic shaped, the business in your business in NLPC?
Sure. So again, I don't want to be very biased in my point of view, but based on my experience and in multiple organizations in the Middle East, the S&OP in general is perceived to be quite a hassle in terms of time, in terms of collaboration, and in terms of the overall time spent behind the process. So I've seen organizations that don't have S&OP. I've seen organizations that the S&OP is governed purely by the sales team and the forecast is just sent out and nobody's challenging it. And I've seen organizations where basically the operations team or the supply planning team manage basically the forecasting without the alignment of the sales. And I've seen situations in time where the only party that actually didn't benefit from the whole process was the organization itself from a financial perspective, whether it is in terms of high raw materials, high packaging materials, aging stocks, out of stocks, and obviously opportunity losses in the market that have been captured by competition, obviously resulting in loss of market shares. So I would say that if you look at, I can hear a bell. Is there anybody trying to ask a question?
No, I think this is people going in.
So if I take it back maybe 10 or 15 years ago, I would say the S&OP in general was not something that was embedded into organizations as it is today. I would probably say that today organizations are way much more geared than they used to be in the past, and they have taken the S&OP in general way much more seriously than they used to 10 or 15 years ago, if not 20. So I think today it is more important than it used to be, and I believe that it will only get more important as obviously there becomes more financial pressure in terms of spikes in raw materials, packaging material spikes, and obviously logistics and supply chain costs, whether internally within the country or whether it's to export. So I think organizations need to be more cautious, more vigilant in terms of how to optimize and manage their resources from a capital perspective. Hence, I would presume that an organization that has a set or established S&OP will need to upgrade to a business process to help them obviously evolve further.
But don't you think that this has been we only see these basically in big organizations, and sometimes they say that S&OP and forecasting and all this inventory optimization, the AI that comes around it is only reserved for big organization. In your view, being part of a big organization as well, when you were in other organizations as well, maybe in medium and small size, do you think this is a one size fit all, or does it don't only belong to the group of big corporations?
No, not at all. Of course not. Like any such business process is applicable across the board. The only difference is that the integration period or time takes longer in bigger organizations because in general, the nature of the business is much bigger, right? So there are more stakeholders, there's a bigger portfolio, there's more master data reviews. So the overall process takes much more time than integrating such a business tool into a small organization. But there are a lot of new kids on the block, if you allow me to say that are coming up in markets, whether distribution companies or manufacturers, that are pretty much new and at inception. And I would highly recommend any organization in inception, small to medium SME, to invest in such a business process tool, because at the end of the day, it's all about how you utilize your resources, whether financial or non-financial, in the right manner. So as long as such an investment, which is obviously not a substantial investment, can give you the desirable or desired ROI as quick as possible. And based on my experience, where I've worked for organizations that have such a business process, the ROI is almost instant. To go back to your second question in regards to what we as NFPC have done, the COVID, the pandemic in general, was very difficult. It was very difficult for everyone, right? Not just for people, but for organizations. It took the whole world by surprise. Nobody was really anticipating or expecting that it was going to take such a toll, and it was going to happen in such a quick manner, right? Where everybody was living a normal day, and then overnight people started getting quarantines, and we had XYZ, which we all know where. So yes, but again, organizations need to have a BCP, need to have a business continuity process or a plan. They need to anticipate, force majeures or any situations where such situations can happen, right? So we somehow anticipated that this was going to happen, and we took the right measures, whether from a health and safety perspective, whether from office, office management or resource management. The most important thing is that we learned to challenge ourselves. We learned to operate remotely. We learned to create automation and endorse digitization, whereby a lot of people were basically not available in the office, right? So the business and the show must go on. So we endorsed a lot of automations, whereby a lot of approval processes, creation, new customer creations, business development agreements, budget approvals, were basically pretty much all automated. So just from a click contracts, basically from a click of a button, you get the workflow, you review the document, you add your comments, you approve, you reject, etc., and goes back to the initiator or continues to the flow. So we learned a lot about automation. We learned a lot about supply chain. We learned about planning, geographical planning, and route optimization. We learned a lot about resource optimization. And most importantly, we learned that the humankind in general will prevail, because we did prevail together. We collaborated, we enhanced communication, and most importantly, we supported each other, right? And we learned, we developed, and I'm very grateful to say that we are one of the perhaps, I don't want to say few, because it's not fair to say so, because I'm sure a lot of companies did that, but I think we're one of the lucky organizations that thrived through the pandemic, despite a lot of unexpected costs, masks and PCRs, and obviously all these were unbudgeted at one point in time, right? But we thrived. We were able to retain our shares. We were able to dissect opportunities differently. We focused resources in different channels. We focused on different brands, and we tried our best to retain our profitability across. Now, we did struggle with our forecasting, because nobody really understood or knew at that point in time what scenarios to take into consideration, right? Airlines shut down, the hospitality industry shut down. So we had to put a lot of assumptions into perspective in order for us to somehow manage our inventories and our procurement. We faced, like many companies, I'm sure, some anomalies here and there, but when you look at it at the overall picture, I think we thrived, and I think we did quite well in comparison to what we anticipated last year. And this is only, for me, was a preparation, because this year we're off onto a great start. We're doing great because we've learned, and we have been able to put into perspective, and pave quite a smooth future so far for us.
Yeah, I mean, I think my view on the pandemic is it's had great challenges to different industries' demand, both up and down, and is still having an impact in terms of supply. Lengthening lead times, and that's still getting worse. It's being hampered by many countries around the world. They've got a post-pandemic boom. Lots of businesses have seen a transition from more B2B to B2C, with people working and being on lockdown at home. And I think, again, technology can help in this space. Having tools that can very quickly tell you that your demand is changing, and as soon as, because information is power, right? If you don't have that sort of visibility as to things that are changing, then it can creep up on you slowly. The sooner that you know something is changing, you can work to address it. And I think, in terms of those lead times, I think they're continuing to increase. Lots of manufacturers, and the manufacturers of the raw materials that they used, they were shut down for a long period of time, and now it's hampered by this post-pandemic boom around the world. And of course, we've got this conduit called freight to try and get this demand, the supply on through. Everybody I speak to is chasing containers from one part of the world or another.
Correct.
So during this real upheaval, having tools that give you visibility to things that are changing really is a game changer. And I think just in terms of timing, we probably need to consider Q&A now, Mitchell.
Yes, I was just going to say that, we're a little bit about 3 minutes behind schedule, which is fine. Well, thank you, Dave and Najib, for the great discussion. And now I'm going to open it up for Q&A. So guys, if you have any questions, feel free to raise your hand and I'll call you out. And then you can unmute and ask your question. Don't be shy.
And be nice.
Be nice. Okay, so I have first person Miriam. Miriam, can you unmute?
Yes, hi Mitch. Don't know
Hi,
if you remember me, but you might.
Come on, Miriam, the old times in Nestle Iran.
Thank you and the other co-hosts for the interesting discussion. What I would like to ask the three of you to put more pressure and maybe details on is that this discussion so far was quite comprehensive, but it was more on the tools and the processes that need to be in place to ensure alignment between sales and supply chain, especially in the past 1 year, where the uncertainty has been more than ever before. So, I mean, all the measures that had been put in place to increase the accuracy, maybe they were no longer handy and things need to be adjusted. But what I'm trying to figure out from all the points that were discussed so far is whose stock is it really? So when it comes to the point that we need to have more inventory because of the increased lead times and less predictability of the environment, who is credible for the stock and who needs to take the blame? I mean, is it both shared?
The blame. So Miriam, are you on the sales side by any chance?
There is an element of blame.
Are you on the sales side in any chance?
I have been on both sides, demand and supply planning and also sales.
Okay. Yeah, I mean, my view is, whose stock is it? It's the business's stock. And, you know, in terms of the different functions, they've got different pools on what that stock level should be. But at the end of the day, when things are changing, that could be demand, that could be lead time, having the visibility to quickly determine that those changes are taking place and applying the changes and what we think is going to continue to change as an input to both the robust forecasting business process and then the supply planning element, which is fed by that first piece, is paramount.
I'd like to also add my perspective. Hi, Miriam.
Hi, Najib.
I think you touched on a very important point. So I'm just going to give you a simple example. So we all know that the expo is coming up, right? In Q4 and Q1, end of this year and Q1 of next year. So a lot of us are asking this question and know what are we supposed to do or how can we gear for the expo? Because one, we don't want to build too much stock and then obviously the sales don't materialize. And at the same time, if we don't build enough stocks, then we lose the opportunity, right? So I think one of the learnings from the pandemic is that trying to acquire as much knowledge for us to be able to make the right business decisions. So for instance, we've reached out to the airlines. We've tried to understand from the airlines that in October, November, and December, what are the bookings that they've had? We've reached out to some hotel chains, try to understand their occupancy and their reservation rate. We've reached out to booking.com to understand what is the spike in the reservations for that period of time, to use that data as an assumption for us to be able to build stocks, considering the extended lead times, to build enough stocks for us to cater to the uplift of the demand that is expecting to come.
Right.
That is one
Thanks
of the
for your-
approaches we adopted, for instance, and how we're trying to be agile and anticipate.
Thanks for the explanation, Najib, and also to Dave. I don't want to take too much time. Maybe other participants also have questions, but what I think it's worth for all of us to rethink is what we call opportunities, because I myself had a very different perception of opportunities when I was in sales, as opposed to the time that I was in demand and supply planning. I mean, in sales, we always tend to overestimate the opportunities and more
Correct.
look on the
Little
positive
bit.
side and the uplifts rather than the negative environmental impacts that might be coming.
Yes, then you should work with me, and then you'll understand that I'm very detailed.
And realistic?
Absolutely. I go to my board all the time with the deliverables below budget.
Well, look, Miriam, I mean, I've personally worked closely with Najib, and I'll tell you, he's maybe one of the very few sales directors that is the biggest cheerleader for SNOP and the one that demands it, so yeah, it's an interesting detailed work that you do, Najib. No, but this is it. So
trust me, I go through thousands and thousands and thousands of lines during the forecasting process.
It's very good to hear. Thanks for the discussion.
I mean, one of the things I advocate for is to measure forecast accuracy, and forecast accuracy be part of the sales folks, compensation. If they're providing information that is just inaccurate, then it's not acceptable, really, on an ongoing basis. So like most business processes, it needs to be managed and measured, because if you don't measure it, you don't manage it.
Absolutely.
Next question, I think it was Kunal who raised his hand, if I'm not mistaken.
Absolutely. Hi, Michelle. Thanks for
Hi, Kunal.
organizing this this webinar. I have got two questions. I'll make it really quick because of the interest of time. So the first question is for Dave. So Dave, you spoke in the initial part of this webinar, you spoke about demand risk and supply risk. So keeping the supply risk aside, I just want to focus on one part. How are you calculating demand risk? Is it by finding out the difference between a baseline forecast, which is created by statistics or statistical methods, and comparing it with comparison could be your projections, which is coming from sales? Is that how it is being measured?
So whether it be the statistical forecast or one that's been amended, okay, with that market intelligence, the actual accuracy of what the forecast has been is really by considering the total, what we call look forward period. So it's the sum of the lead time plus safety stock plus replenishment cycle, you know, which might be, let's say, 3 months long. So what was the forecast on during each of those 3 months compared to what the actual sales were? Because that is what impinges on that that demand risk, if you like. And then what we do is we basically are looking over a period of time as to whether there is a tendency for the demand to be under forecast or over forecasted. And then based on that analysis, we amend the safety stock as a consequence. You know, if you're perpetually underselling the forecast, then that's generating safety stock in its own right. So you need less safety stock if that's the picture. If there's a tendency to oversell the forecast perpetually, then you need more safety stock. So that's the way that we do it.
Thanks, Dave. The other question is for Najib. Hi, Najib.
Hi,
And
Kunal.
I think, nice to meet you virtually. I
Same
think
here.
Mitchell made a very good statement. I also agree. The moment you said that you go through each and every line item and try to find out the iteration at SKU level, I think very few sales guys do it, and especially at a leading position in an organization, it is definitely not practiced so often. So I know a few of them, and you are one of them now.
Thank you. Thank you, Kunal. I
Yeah.
actually do it, to be honest with you, I do it because it is more about coaching and training my team, creating that culture. Because, you know, sales team, they look at it as an overall from an accuracy perspective. And to me, I look at it biased. I look at it down to the SKU. So any variation by SKU to me is the right variation and deviation to the forecast. So it's a cultural development, let's say, more than something that I enjoy doing. So let's be
Very
honest.
nice. Indeed, what you said is, of course, it's well said, and it makes a lot of sense. Eventually, gradually, you would see the benefits, if not in a very short span of time. But definitely, this is a cultural spread that you are approaching. Now, my question to you is, you spoke about classification of SKUs. I think there was a point of discussion between you and Dave when you spoke about the Pareto rule. You're using, or probably you had used 80-20, but this is my question. Did you try to merge FMR ABC methods for classification of SKUs to allocate your top line forecast? Or this could be a question, or this could be a suggestion, because FMR, which is fast, medium, and rare movers, and ABC, which we all know, it's also used in finance, which is we have this ABC classification, right? We have always better in control, that stands for ABC. So did you merge these two concepts and try to classify it? If not,
Yes.
I would suggest you to please do it. Yeah, if we've already done it. So how's your classification of SKUs performing through these methods?
It's a very good question. So we follow two approaches. So there is obviously the ABC approach, but there's also a classification within the A, B's, and C's. So it's something similar to what you highlighted, but for instance, what we do is that within the A, you have, for instance, your cash cow. Within the A, you have your innovation. You have your financial drivers. So we have classifications within the classifications under A, B, and C. Okay, just so for instance, I have products of BCG model. So I have my cash cow that generates the volumes with acceptable profitability is an A. I have A SKUs that have very small volume but very high profitability. And I have A that are strategic by nature, whether it's an innovation, renovation, or a value added or a niche category that we have penetrated or developed. So we segment the classifications down to level 2.
And it's a very good question, Kunal. I'm just going to share my screen for a moment. Okay,
Sure,
so in NetStock, you know, in every warehouse, we're doing two swathes, if you like, of classification. There's the standard ABC, but we also do the high, medium, and low as well. And that gives rise to 9 classifications in NetStock. You know, and this leads into applying those policy parameters beyond there as a starting point. So here now, we can see the desired service level for each of those classifications and the frequency with which you replenish it. And of course, this then leads into an understanding of how much inventory you should have. So that drives basically the answer to the question, whose stock is it anyway? Because then we have an input in terms of the desired service level, the fill rate we want to achieve. We use the forecasts from that robust forecasting business process to then give rise to those min-max levels, which we can then see valued up, and how much inventory we should have on the shelf on average. So it's a very good question, Kunal, and we do that in NetStock already.
I'm glad that this is not even practiced as a concept in, you know, in Najib's organization, but it is also a part of, you know, the application that we just saw, NetStock. So good thing. I'm glad that people are using it.
What do you do? Yeah. I'm curious, Kunal, where do you, sorry, which organization are you operate in, and what do you do exactly?
I basically am based out of India, Mumbai, and I work for a company called Visual BI Solutions. We are into IT, consulting, product services. We are partners with Microsoft. We are partners with SAP, Lumira, and a lot of environments, right? So we have, you guys must be aware of Power BI, Microsoft Power BI. So we have all the products, you know, we have all the products that go into Microsoft Power BI. We make it for Power BI's ecosystem. And one of the tools that I am closely working for is ValQ, which is a modern visual planning solution. It sits on Power BI, and it will consume your data from various sources that Power BI helps you to connect. And there are a lot of simulations, scenario planning, predictive analytics that happens on that tool. So this is my IT journey, but I have more than 10 years of experience as a demand planner, a forecaster, and I've also handled manufacturing, material planning, MRPs, production planning, scheduling, capacity planning. I have worked for, I started for petrochemicals, then I got into specialty chemicals, then I got into nutraceuticals, robotics, pharmaceuticals, and with all this functional knowledge, I was able to address some of the challenges through YouTube videos that I made 4 or 5 years back. And then I eventually started working with Visual BI Solutions into IT. So earlier I was a user of the products. I knew the challenges. I drove SNOPs, but now I am creating products for my organization, helping them to create sustainable products for SNOPs and other planning portfolios and domains. So that's all about me.
Fantastic.
Nice.
All the best.
Thank you so much, Kunal. Thank you.
Thank you very much.
Anybody else? Anybody else? Any other questions? I know we're running a bit late, but I think it's good discussions. Any other questions? Going once?
You're gonna bang
I will
your
pay,
hammer.
we have here. Okay, Sebastian.
Hi, Sebastian here. I'm not in the supply chain logistics, but I got something, and I worked in demand planning from different sides, from innovation, production, and marketing. So I'm quite aware of the process in the places where I did it. My comment was that what I perceived from Dave and the tool was that it was bringing actually support to a process, the process of generating the demand plan or the forecast, which is actually, humanly speaking, a very painful process. And it is so because it's putting together all the diverging objectives of all the functions of the organization, where finance says this, marketing says that, production says this, business wants that, and sales wants that, and everybody disagrees. And people actually hate that, confronting things that don't, where the agreement is not easily found. And I found that this actually is the base offering that you're coming with, is helping a very divisive and difficult process in the organization by bringing a base solution, which is often as good as it can be, or close to that. And then it can be fine-tuned, which is a less confrontational process. So I wanted to bring that sort of human look. What is your comment on that?
I wholeheartedly agree with you, Sebastian. That's why we call this "Whose stock is it anyway?" Because different functions have a pull on what that number needs to be. So having a tool that unites all of those functions together and enables, an understanding of, based on, the desired service level, the ongoing forecasts, the inventory risks, what should our investment look like? And how does that compare to what we have, And then, because we're doing that right the way down to the individual item level, it gives you great visibility of items where you've got too much in stock, too much on order, ones that are stocked out, ones that are gonna stock out before the next delivery. It just gives the operations guys an understanding of an agreed inventory value that then they've got to deliver.
Yeah. Yeah.
Absolutely.
Okay. Thanks, guys. Great discussion.
You're welcome. You're welcome. Thank you for your comments.
Any other questions? Maybe we'll have one more question before we close the meeting. Anybody? No one? There'll be some financial compensation. Okay, maybe not. All right.
How much? I'll ask a question.
10 dirhams for the next question.
I don't know how much that is.
No, it's about $3. So okay. All right. So anyway, we're a bit above time. I think we'll close it in here, guys. I don't know if there's any closing remarks from you, Dave or Najib, or anything.
No, it's brilliant. Thank you all who attended.
I enjoyed the session.
Same here. Okay.
All the best.
Guys, thank you very much.
We've got a hand right. Oh, a clap. We've got a clap.
Yeah, we got 2 claps. That's awesome. So for everyone who attended, they'll be receiving a feedback form in the next couple of hours. So it will be great if we can hear your feedback, because we're planning to continue this series. So the more information that we have, the more feedback we have to make it better, to make it smoother, to make it more enjoyable. It's always welcome. All right, and that's it. That's about it. And maybe we can part with this. The big question, I think, to everyone is: should we kill Excel once and for all and take it out of our misery or not? So I don't want anyone to answer that question. We'll leave that as a food for thought for next time. Okay.
Thank you. Thanks, everyone.
Right.
Cheers, everyone.
Thanks, Najib, Dave.
Thank you. Thank you. Thank you all.
All
the best.
Bye.
Bye-bye.
And be
Thank
safe.
you.
Be safe.
Thank you. Ciao.
Ciao, guys.
Ciao, guys.